Hey, welcome back. What if I told you that you could build a watch list of the most consistently profitable wallets in crypto and simply watch what they buy before the rest of the market catches on? This is not theoretical. This is a real strategy that sophisticated investors use every single day. It is called smart money wallet tracking, and it goes far beyond simply watching whale wallets for large transactions. Smart money tracking is about identifying specific wallets that have a demonstrated history of profitable early decision making and then systematically monitoring what those specific wallets do next. Here is why this works. Some wallets consistently buy projects months before they become widely known and then sell near the top. Some wallets consistently identify genuine technological innovation before the broader market understands its significance. These wallets belong to venture capital funds, professional traders, and individuals with genuine skill and research capability. And because blockchain data is permanently public, you can identify these wallets and build a systematic strategy around watching them. Today, I am going to show you exactly how to build your own smart money tracking system, how to identify genuinely smart wallets, not just big ones, how to monitor them efficiently, and how to use this information as part of a complete investment strategy rather than blindly copying trades. Let us get into it. Smart money versus whale money, the critical difference. Before going further, you need to understand a critical distinction that most beginners miss completely. A whale is simply a wallet that holds a large amount of crypto. Size alone defines a whale. Smart money is completely different. Smart money refers to wallets that have demonstrated a consistent track record of skillful, profitable decision making, regardless of their absolute size. Here is why this distinction matters enormously. Many large wallets are not actually smart. They might belong to early miners who accumulated Bitcoin accidentally just by participating early. They might belong to exchanges holding customer funds with no independent investment thesis at all. They might belong to investors who got lucky once with a large position and have since made poor decisions repeatedly. Following a whale just because it is large can lead you to copy poor decisions made by lucky or unsophisticated holders. Smart money tracking, in contrast, focuses specifically on wallets that have repeatedly demonstrated genuine skill. A wallet that accumulated several different small projects early, each of which later grew significantly in value before any of them were widely known, is showing a pattern of skill. A wallet that consistently enters positions during accumulation phases and exits during clear distribution phases across multiple market cycles is demonstrating genuine market understanding. The size of a smart money wallet matters far less than its track record. A smart wallet with a relatively modest position size that has consistently identified winning projects early is far more valuable to track than a massive wallet that happened to get lucky once on a single trade. This is the fundamental mindset shift required for effective smart money tracking. You are not hunting for the biggest wallets. You are hunting for the wallets with the best demonstrated decision making over time. How to identify genuinely smart wallets. Now, let us get into the practical process of actually identifying smart money wallets worth tracking. Method 1. Reverse engineer successful projects. When you identify a project that performed exceptionally well, go back and look at its early transaction history on a blockchain explorer. Identify the wallets that bought in during the earlier stages, well before the project gained significant attention. These early buyers are candidates for smart money status, particularly if the same wallet addresses appear as early buyers across multiple separate successful projects. This is the single most reliable method for identifying genuine smart money. A wallet that was early to one successful project might be lucky. A wallet that was early to five separate successful projects across different sectors and different time periods is demonstrating genuine skill that goes beyond chance. Method 2. Use wallet labeling platforms. Platforms like Nansen specifically label wallets based on historical profitability and behavior patterns. Nansen has specific labels, including smart money categories, that have already done significant work identifying wallets with strong historical track records. This significantly accelerates the identification process compared to manual research alone. Method 3. Follow known venture capital and fund wallets. Established crypto venture capital firms and trading funds often have publicly known or identifiable wallet addresses, sometimes disclosed voluntarily, sometimes identified through on chain research by the broader analytics community. Following the wallets of funds with strong public track records gives you visibility into professionally researched investment decisions. Method 4. Monitor for consistent accumulation during quiet periods. Genuinely smart wallets often show a specific behavioral pattern. Consistent methodical accumulation during periods of low prices and negative sentiment, followed by distribution during periods of high prices and excessive optimism. This contrarian patient behavior pattern, repeated consistently across market cycles, is one of the clearest behavioral signatures of sophisticated capital. Method 5. Track wallets associated with successful identifiable individuals. In some cases, publicly known successful investors or builders in the crypto space have wallets that have been identified through their own disclosures or through community research. When these identities are reliably confirmed, their wallets become valuable to monitor, given their demonstrated expertise and track record in the space. Building your tracking system. Once you have identified candidate smart money wallets, you need a systematic process for monitoring them efficiently, rather than manually checking dozens of wallets individually every day. Step 1. Create your tracked wallet list. Build a documented list of wallet addresses you have identified as smart money, along with notes on why you identified each one and what specific track record makes it worth tracking. This documentation matters because you will accumulate many wallets over time and need to remember your reasoning for tracking each one. Step 2. Use wallet tracking and alert tools. Platforms like Nansen allow you to create custom watch lists of specific wallets and receive notifications when those wallets make significant moves. Arkham Intelligence offers similar functionality with strong visualization of fund flows. Some blockchain explorers also offer basic alert functionality for specific addresses, though typically with less sophistication than dedicated analytics platforms. Setting up alerts means you do not need to manually check each wallet repeatedly. You are notified when meaningful activity occurs, allowing you to investigate and assess the significance of the move when it actually happens. Step 3. Categorize the type of activity. When a tracked wallet makes a move, categorize what you're seeing. Is this a new position being opened in a project you were not previously aware of? Is this an addition to an existing position? Is this a wallet exiting a position they have held for an extended period? Different types of activity carry different significance and warrant different responses. Step 4. Cross-reference with multiple smart wallets. The real power of this strategy comes from pattern recognition across multiple tracked wallets, not from following any single wallet in isolation. When you notice that several different wallets on your tracked list are independently accumulating the same project around the same time, That convergence is a significantly stronger signal than any single wallet's individual activity. Step 5. Maintain and prune your list regularly. Smart money wallets can lose their edge over time, change strategies, or simply stop being active. Review your tracked list periodically, removing wallets that have shown poor recent decision making and adding newly identified wallets that demonstrate strong track records. How to act on smart money signals responsibly. Having a smart money tracking system is only valuable if you use the signals responsibly rather than blindly copying every move you observe. Principle 1. Use smart money signals as research starting points, not final decisions. When you notice several tracked wallets accumulating a specific project, treat this as a trigger to begin your own independent research into that project, not as an automatic buy signal. Apply the full fundamental analysis framework, examining the team, the technology, the tokenomics, and the competitive landscape before making any decision. Smart money activity tells you where to look. It does not replace doing the actual looking yourself. Principle 2. Consider timing differences carefully. Smart money wallets often enter positions extremely early, sometimes months or even years before a project gains broader attention. By the time you notice their activity and conduct your own research, the entry price available to you may be significantly higher than what the smart wallet originally paid. This does not mean the opportunity is gone, but it does mean you need to evaluate whether the current price still offers reasonable risk to reward, given how much the situation has already developed since the smart wallet's original entry. Principle 3. Pay close attention to smart money exits. While smart money accumulation gets most of the attention, smart money distribution, meaning when these wallets begin selling, is equally, if not more, valuable as a signal. When wallets with strong historical track records begin exiting a position you are holding, this deserves serious consideration, even if the broader market sentiment around that project remains positive. Principle 4. Size your positions based on your own conviction, not the size of the smart wallet's position. A smart money wallet might allocate a position size appropriate to their total portfolio, risk tolerance, and specific strategy, which may be completely different from yours. Use their activity as a signal of quality and timing, but size your own position according to your own risk management framework, not theirs. Let me bring your complete smart money tracking strategy together. Understand the critical difference between whale money and smart money. Size alone does not indicate skill. Track record and demonstrated decision making over multiple cycles is what actually matters. Identify genuinely smart wallets through reverse engineering successful projects using wallet labeling platforms like Nansen, following known fund wallets, monitoring for consistent contrarian accumulation patterns, and tracking identified successful individuals. Build a systematic tracking process. Document your wallet list with reasoning. Use alert tools so you are notified of activity without manual checking. Categorize the type of activity you observe. Cross-reference patterns across multiple wallets for stronger signals. And maintain your list by pruning wallets that lose their edge. Act on signals responsibly. Use smart money activity as a research trigger, not an automatic decision. Account for timing differences between when smart money entered and when you notice the activity. Pay equal attention to exits as you do to entries. And size your positions based on your own risk framework, not theirs. Here is the final perspective I want to leave you with. Smart money tracking is not about finding a shortcut that replaces doing your own work. It is about focusing your limited research time and attention on the opportunities that sophisticated, demonstrated capital is already paying attention to. It is a filter that helps you find signal in an overwhelming amount of market noise. The wallets of the most consistently skillful investors in this market are sitting in plain sight, permanently recorded and completely public. Most retail investors never think to look at them systematically. Now you have a complete framework for doing exactly that. If this strategy gave you a genuine system for tracking smart money in crypto, please hit the like button and subscribe. This is the kind of edge that takes real effort to build but pays off significantly over time. Drop a comment below and tell me this. Have you ever identified a wallet that consistently makes smart early moves? I read every comment and I want to hear what you have found. I will see you in the next one.